Hello, everybody. Welcome to the Bitcoin Not Crypto podcast. I'm just going to double check. I've been having issues with this microphone here. I think I'm good. Let me know in the chat if my mic sounds good. Welcome to everybody. Welcome everyone to the show. Every single Monday, I do this show at 10 a.m. Pacific Standard Time. Today, we're going to talk about Jane Street. You've probably heard about this a little bit, but Jane Street is this private company that has privileged access to certain pockets of Wall Street markets and so on, and has had a dubious past and is now in a lawsuit alleging that they are partially responsible for the collapse, or maybe the sort of linchpin that collapsed the Terra Luna Ponzi scheme that existed out there, or algorithmic stablecoin, if you want to be generous with what you call it. So I'm going to discuss this article you guys may have seen float around. It's got 6 million impressions on Twitter. Pretty interesting stuff. We're going to kind of go through it together. I haven't actually taken a look at this. I have heard some other opinions and perspectives about Jane Street. I have my own opinions based on what I do know, but I'm going to take a further look at this article and we'll kind of, again, figure it out together. Before we get into the show, though, I want to give away some free sats. So this is courtesy of Bitcoin Wealth. It's my preferred exchange when I buy Bitcoin. The reason it's my preferred exchange is there's no risk. You send dollars, they send Bitcoin directly to your wallet. They don't hold it for you, and I feel comfortable promoting an exchange like this and letting my viewers know about it, because there's no risk like what happened with FTX and people's funds getting stolen. They also have this really cool rewards program, which I'm going to do right now. So if you're the first person to scan the QR code that's about to pop up with your Lightning wallet, you will win some free Satoshis. You could win up to 1 million. And we've had somebody win 210,000 on this show twice, I believe, actually. Anyway, we'll hit it, and we'll do 2 now. We'll do 2 at the end of the show. Only one person will win each of these. So 210 sats, first person that scans that. If you don't want to compete for these, you can just sign up using my link, and you will get 5 free tosses in the Bitcoin wishing well. All right, we'll do one more, and then we will get into it. I still don't know why they make you refresh the page. Very, very annoying. All right, we'll do one more. A little bit more free Bitcoin for everybody, or for one person specifically who scans it, and then we'll get into today's show. 210 sats again. Not super exciting, but something for sure. So before we get into it as well, I do want to just say this QR code brings you to my school community, and the school community is awesome. It's got my exclusive courses on there. It's got a really great community of really intelligent Bitcoiners who are all discussing things, asking questions. There's actually a community member who did this deep research in the 2 different Electrum server apps you can run on your Start9. He found a problem with one. He's testing the other, and he's going to be posting it himself. So there's user-generated content on here, as well as exclusive access to my courses. So I have one course here, Bitcoin Masters, Beginner, Basics, and Beyond, 8-part course. This Bitcoin economics one is really, really interesting, actually. Everything you need to know about Bitcoin is here. And then I have a more advanced one here about privacy, best privacy practices on Bitcoin. And if you use, you can sign up using that link, or you can go to my website and you can actually book a one-on-one consulting session with me, and you'll get free lifetime access. And that's only for the first 100 members of the school community. We have 38 members right now. So spots are limited, and then there'll be no more lifetime access. Okay, let's get into it. I know you guys have been very patient with me doing this plug here in the beginning of the show. Thank you, appreciate it. All right, so this is the article. This is by Justin Batchelor. I believe that's how you pronounce his name. The 10 a.m. drop, how Jane Street broke Bitcoin's price. Now, this is alluding, let's see if I can go full screen. Nice. Okay. This is alluding to this idea of a low liquidity window on Monday, as soon as the markets open and there's this arbitrage between Bitcoin's weekend price that trades 24/7 and IBIT's price, which has to correlate and connect to Bitcoin's price. And Jane Street is an authorized partner or authorized participant in being able to arbitrage and keep this the IBIT trading in line with Bitcoin. So we're actually gonna read. This isn't too long of an article. We're actually going to read this and talk about it ourselves here. So at any point as well, this show is wrong mic. No, my God. 1 second. This whole time, wrong mic. I've been having issues with this microphone. My apologies, everybody. My apologies. That should be way better. Appreciate that. Appreciate that. Okay. We're going to actually talk about this. Ask questions, make comments as we go through the article. This is also a Q&A show, so at any point you can ask any general questions as well about Bitcoin, about anything that I've said, and I will get to those after this article. This show is only an hour long, so let's breeze through this. So Bitcoin should be at least 150K right now, and everyone knows it. Yesterday, a federal lawsuit was filed in Manhattan that explains exactly why it isn't. Let's connect 3 threads for the first time. A federal insider trading case built on a private chat group called Bryce's Secret, a pattern of systemic 10 a.m. sell program that suppressed Bitcoin's price through late 2025, and an undisclosed derivative book that may make the largest Bitcoin ETF position in history a tool for suppressing the Bitcoin price. This is absolutely true, that the Bitcoin ETF is being built as a tool for Wall Street to basically just extract value by manipulating the price to some degree. All 3 threads lead back to one name, Jane Street Capital, the intern. It starts with an intern named Bryce Pratt. Pratt worked as an intern at Terraforma Labs, the Singapore-based company behind the algorithmic stablecoin Terra Luna USD and its token Luna. He left Terraform and joined Jane Street as a full-time employee in September 2021. Jane Street is also where SBF, Sam Bankman-Fried, learned to trade before founding FTX and Alameda Research, and many of his future colleagues came from the firm or intersected with its networks. The whole existence of SBF, if you actually look into it, is very weird. It's like he appeared almost out of nowhere, being with a huge amount of backing to create this exchange and trading desk, and is almost like a Jane Street plant into the and possibly like Fall Guy as well for other things that were going on. Like, I don't think he's the only one responsible for what happened there. And he's touted as like this altruistic genius, young genius, and it's like, what? That's such a character, like a character caricature. I don't know. Very sus. Very sus. According to the lawsuit filed by Terraform's bankruptcy administrator, Todd Snyder, Pratt became the bridge between his former employee and his new one through a chat group that court filing describes as Bryce's Secret. The lawsuit alleges that Jane Street used this channel to obtain material, non-public information about Terraform's internal liquidity moves. The critical moment came on May 7, 2022. Terraform withdrew $150 million in Terra USD from Curve 3 Pool, a decentralized trading platform that served as the primary liquidity hub for the stablecoin. Within 10 minutes of that withdrawal, before Terra Luna informed the public or made any announcement, a wallet linked to Jane Street pulled $85 million in Terra USD from the same pool. So this caused the Luna token was linked, and I'm sure he'll probably, he explains it. The combined selling pressure helped trigger UST's a break from its dollar peg. Within days, Luna's algorithmic mint and burn mechanism spiraled out of control, hyperinflating the token supply and destroying $40 billion in market value. Retail investors suffered catastrophic losses. What's really interesting about this is it was a lot of retail that I think they were offering like 20%, 19% or something like that on your UST in sort of a staking reward type program. And they had to offer that because it was incredibly, they basically had to offer that to incentivize people to hold it to keep the whole thing stable. And that enticed a lot of retail, and it enticed Three Arrows Capital and BlockFi to be part of that ecosystem too, which led to the bankruptcies of those companies as well. Incredibly damaging to the entire ecosystem. Jane Street, according to the lawsuit, but you know what? If something is fragile, it should break. That's my theory. Okay. Jane Street, according to the lawsuit, avoided more than 200 million in potential exposure, but unwinding its position at precisely the right moment, mere hours before the Terraform ecosystem collapsed. The lawsuit describes trades that would have been impossible without insider information to which Jane Street had unique access. Jane Street calls this suit desperate and baseless, arguing that the losses suffered by Terra and Luna holders were caused by Terraform's own fraud. That's not a lie. It was their own fraud, but it could be triggered by activity such as what Jane Street is alleged to have done. Do Kwon is now serving a 15-year prison sentence. Snyder has also filed a separate $4 billion lawsuit against Jump Trading over alleged manipulation of the same collapse, which suggests a systemic investigation into institutional conduct during the Terra death spiral rather than just an isolated claim against a single firm. I think that's really important. A lot of people are pointing at Jane Street. Oftentimes, with these sort of headline narrative stories, you do need to point at one element, one name to sort of concisely wrap up the whole thing. But this is just something that exists within the Wall Street ecosystem, that's for sure. So here is Zero Hedge posting some of the information that was talked about here. The clock, beginning in late 2024 and accelerating through 2025, Bitcoin's price began doing something that traders noticed but couldn't explain. Every trading day at 10 a.m. Eastern, coinciding with the US stock market open, Bitcoin experienced sudden and sharp sell-offs. The drops were precise, algorithmic, and wildly disproportionate to broader market conditions. They wiped out leverage long positions, triggering cascading liquidations, and then reversed within hours. If you've been following this channel for a while, you've heard me talk about how in the short term, whales are manipulating the market to flush out leverage. This is essentially that, but with buying and selling spot by these institutions, and then having the opposite trade in derivatives that are much larger and leveraged themselves and profiting from that while actually having losses in the spot market. That's exactly like whether it's individuals doing it, probably less so than organizations doing it. There's a reason that organized crime exists. It's easier to do crime if you're organized. Jan Happel and Jan Allenman, the co-founders of blockchain analytics firm Glassnode, documented these patterns through their shared account, Nengentropic. They tracked the algorithmic precision of the drops across months of trading data, and the pattern was not subtle. Charts from December show Bitcoin falling from 89,700 to 87,700 within minutes of the 10 a.m. opening, erasing 171 million in long positions before recovering. This happened every day, day after day. Okay, so this wasn't just a Monday thing, as I thought. He's saying it happened every day. Interesting. Okay. I guess if you can do it, you can do it, right? Jane Street, as a designated market maker and authorized participant for multiple Bitcoin ETFs, had both the inventory and the infrastructure to execute coordinated selling at scale during predictable liquidity windows. Selling into thin order books at the open would depress the price, trigger liquidation cascading among leveraged traders, and create buying opportunities at lower levels. The firm could then re-enter at the bottom of the move it had manufactured. Liquidity, this is why liquidity is so important and really shows a lot more information about how much interest there is in a market or how much value there is in a market. Liquidity is one of the most important underrated aspects of a market. There's a reason they do this at low liquidity times, because it takes less capital to move the market past the buy and sell orders. Then something revealing happened. According to Glassnode's co-founders, the daily flash crashes ceased after the Terraform Labs lawsuit filing became public early last year. Bitcoin's price stabilized significantly in subsequent trading sessions. The behavioral change is consistent with a firm that suddenly had legal discovery and depositions to consider. Interesting. Okay. I'm not going to fact check all of this right now. There are multiple reports of this information. We're just going to kind of take this for what it is, one article from one researcher. And again, we can assume that he's right. We could individually look through that, but I'm not going to be doing that on the stream, by the way. The 10 a.m. pattern resumed in Q3 2025. By December, it was back with full force. Basically, the 10 a.m. dump stopped the moment Jane Street had lawyers looking over its shoulder and started again when the heat died down. Interesting. Now, that is a little speculative, just off the hop here. To say, okay, so they died when the heat died down. How do we know that the heat died down enough for them to start doing it? Again, there could be other participants doing this exact same thing. It's maybe not just Jane Street, but Jane Street does have that sort of privileged position of being an authorized participant and being so tied in and being a private entity as well, which allows them a lot more secrecy in what they do. Here we go. The machine. In its Q4 2025 13F filing, the Jane Street disclosed holding 20 million plus shares of IBIT worth approximately $790 million. The firm added 7 million plus shares during the quarter alone, a 276 million increase. And at one point last year, its total IBIT position was valued at nearly 2.5 billion. Simultaneously, the firm boosted its holdings of MicroStrategy stock by 473%, accumulating 951,000 shares worth roughly 121 million. Even as BlackRock and Vanguard divested billions in MSTR during the same period. So they're counter trading BlackRock and Vanguard's position. This looks like a bullish accumulation if you don't understand what Jane Street actually is. Jane Street is one of the only 4 firms authorized to conduct in-kind creations and redemptions for IBIT. The others are Virtue Americas, JP Morgan Securities, and Merix. Jane Street is also an authorized participant for Fidelity's and Wisdom Tree's Bitcoin ETFs. Now, what's really interesting about this is, why do these ETFs authorize Jane Street to be a participant in this? That's one question I have that I don't really have the answer to. They seem to get a lot of access to be able to be tied into this kind of stuff. And I know these funds need authorized participants to be able to have an accurate price and everything, but why Jane Street? It seems sus. This rule gives the firm direct access to the mechanism that connects ETF share price to actual Bitcoin. Jane Street can move real Bitcoin into and out of the ETF structure, arbitrage price differences between the fund and the spot market, and maintain inventory positions that dwarf what any normal market participant could accumulate. Basically, Jane Street has direct access to the pipe that connects the Bitcoin ETF to actual Bitcoin, and almost nobody else does. The crypto press reported the 13F as a sign of institutional conviction. The people who actually understand market structure immediately said otherwise. The Invisible Book. Former hedge fund manager Michael Green called the bullish interpretation of Jane Street's 13F painful. He pointed out that Jane Street's IBIT position is almost entirely offset by undisclosed options in future positions, and that they are certainly not accumulating a position in Bitcoin. That's how market making works. So they have an equal short position in derivatives and future positions, is what they're saying. Almost entirely offset. Former prop trader Ryan Scott was blunter. Almost anyone posting this as bullish is committing a capital offense. This should be, you'll never guess who also has offsetting derivative position that does not need to be reported. Nick Batier reduced it to incentives. Jane Street owns IBIT, so it can write options, arbitrage, and everything else a quantitative trading shop does to make fast money. Here's what this means for every person who holds Bitcoin or IBIT. A 13F filing discloses long equity positions. It doesn't require disclosure of options, futures, or swaps. When Jane Street reports holding 790 million in IBIT shares, the filing tells you nothing about whether these shares are hedged by puts, offset by short futures, or wrapped in a collar that makes the firm's net Bitcoin exposure zero or even negative. The public just sees accumulation. The actual position could be a massive short that looks like a long because the offsetting half of the trade is invisible under current disclosure rules. The 13F is a photograph of one side of the balance sheet. Nobody outside of the firm can see the other side. This is where the question every Bitcoin holder should be asking becomes unavoidable. If the firm holds 790 million in IBIT shares and offsets that position with 790 in put options or short futures, the net exposure is zero. If the derivative book exceeds the equity position, the net exposure is negative, meaning Jane Street profits when Bitcoin's price falls. In either scenario, the firm has every incentive to use its privileged position as authorized participant to suppress the spot price, trigger liquidations, and harvest the spread. What is Jane Street's actual net exposure to Bitcoin? The current disclosure framework does not require them to answer. I think that's a lot of this is that we literally have no answer to this. And some of this ends up having to be speculation until maybe public discovery pushes something into the open. Jane Street's conduct in Bitcoin markets has not been tested by regulators. Its conduct in other markets has. This is an interesting part of its history. In 2025, the Securities and Exchange Board of India published a 105-page enforcement order against Jane Street entities for manipulating Bank Nifty index options. SEBI found that the firm had coordinated trading across cash and derivatives market to generate approximately 4.3 billion in profits over a 2-year period, with 735 crore extracted in a single trading day. The regulator described the activity as clearly illegal in any country with a functioning financial regulator and issued interim restrictions on the firm's trading. Jane Street's strategies in Indian index derivatives followed a familiar strategy: exploit privileged speed and scale to move on one market, then harvest profits in the derivative layer sitting on top of it. The question is whether the same logic applies to Bitcoin. Holy, okay, great. We're almost done. 21 million. The hard cap of 21 million is enforced by the network of sovereign Bitcoin nodes. The cap assumes the price discovery is honest, that the market reflects actual supply and demand, and that when institutions hold Bitcoin or Bitcoin adjacent instruments, their positions represent genuine exposure to the asset rather than raw material for derivative strategies invisible to every other participant. In other words, the 21 million cap only works if the market sitting on top of it is honest. Jane Street is one of 4 firms with the key to Bitcoin's ETF infrastructure. It faces a federal lawsuit alleging insider-driven front-running that helped destroy $40 billion in value. It has been accused of running algorithmic sell programs that suppressed Bitcoin's price for months, and it holds the largest disclosed ETF position in Bitcoin while maintaining a derivative book that could make its actual exposure the opposite of what the filings suggest. So then the cap is irrelevant when Jane Street can fabricate unlimited synthetic supply through undisclosed derivatives stacked on top of its own ETF inventory. Bitcoin scarcity is real at the protocol level, but the price discovery mechanism sitting above it has been compromised by a firm that treats privileged access as a profit engine, and the current disclosure framework lets them do it without anyone watching. Every Bitcoin holder deserves to know what is Jane Street's actual net position. Until we know, Jane Street decides the price of Bitcoin. Interesting ending thesis. Very, very interesting ending thesis. And we got 88 sats in the chat here. Jor has been calling paper Bitcoin for a long time here. I've been less than generous in agreeing. So I've been kind of saying there is some of that. There is a known derivatives market, but I've sort of been saying more so that there is only 21 million Bitcoin, and ultimately paper Bitcoin gets found out. And I think that even what we're seeing here is how it gets discovered. I don't think it's a clean
discovery of manipulating markets. I think it's messy. I think it's accusational. And I think that it becomes more and more risky to manipulate a market that does have a fixed underlying protocol denominated amount. So if you're creating paper on top of that, and there's a summons for the real Bitcoin, there's a mismatch that cannot be rectified by um, a market that can supply more Bitcoin. So I think that there's definitely the space for manipulation of Bitcoin's price, and that happens through the known derivatives market. We cannot see the private positions of these companies and institutions that hold those positions, but we know that it exists and is happening. And I think the real answer, or the real question I have here, is what can we do as individuals? What can we do as individuals about Bitcoin price suppression? There's not a lot, um, unfortunately, right? So, like, Bitcoin, Bitcoin was always going to be adopted by the Wall Street industry, and that's just part of Bitcoin's adoption cycle. Can it be completely contained, controlled? I think it can only be manipulated in some ways, and it's sort of even price, right? The price of Bitcoin is sort of this thing on top of Bitcoin. Like, Bitcoin still exists. Um, Miners are still hashing, new blocks are still creating, people are still running nodes. This and people are still sending Bitcoin directly to one another. This is Bitcoin. The price of Bitcoin is always a sort of that's a thing on top of it. Like, Bitcoin existed for a really long time until it was given a price. And there were sort of informal exchanges. And then, this is developing in stages. And I suppose what I'm trying to say here, not very eloquently, is this is part of the growing pains of an emerging asset. If you talk to silver bugs, gold bugs, even many other people, they will say that the price is being suppressed and this and that. And I definitely think, more so than ever, that that is definitely the case here as well. What I sort of disagree with the end of this thing here is, I think that this is only possible for a certain amount of time. I think that essentially it's all about incentives. And as Jane Street gets called out for this, if anything happens from the Terraform Labs lawsuit, what happened in India with Jane Street, there's many other institutions likely doing this. As it gets found out more and more, and as they cannot cover their positions, as Bitcoin becomes more limited in many ways, this becomes harder and more risky. And so there's always a risk reward ratio that gets played out. And if a market can be manipulated and the risk reward ratio is good for the manipulator, then it will happen. But as it becomes more difficult to do, as it becomes more risky to do, the risk reward ratio starts to skew in the opposite direction. And it simply just doesn't make sense to continue to do it. And so this is where I think it goes. And I think that, I think even monetary metals, real uh, assets that have that there's an incentive to suppress the price of, to keep costs of production down, right? Bitcoin is 100% monetary premium. It has no other use case but money. So the incentive to manipulate it is to try to profit from that manipulation. But there's many reasons, as I've already stated, that it becomes more and more risky to do so. So I think this is good, that this is a discussion that is getting so many views, 6 million impressions on X, lots of people talking about this, the lawsuit coming out. This is all really positive, right? The more light you shine on these things, the better it is. The less able the shadowy organizations can manipulate markets for. The, I mean, it could be as simple. and I'm not saying this would solve everything, of course, but a regulatory change of an institution that is designated, such as Jane Street, that requires them to show all of their positions, derivatives, and everything, could stop the manipulation of that. I think as an individual, being aware of these things, talking about these things is one thing, but I think we only have so much power as individuals, and that power is oftentimes what you can directly control. So if you hold IBET, you are funding indirectly a mechanism of manipulation of Bitcoin. That is the tool, right? Wall Street uses these types of tools to manipulate the asset. And it is just short-term price suppression and all of this kind of stuff. Anyway, MSTR, the same thing can be said about MSTR to a certain degree. And I actually hold both of those things, so I'm as guilty as the next person. I've been contemplating divesting from these things. I don't think it's the right time for me yet to do so, but I think I'm not actively accumulating these things either. So I'm in a hold position, and I'm actively accumulating spot Bitcoin, which ultimately, the more people hold spot Bitcoin, the less there's the ability to manipulate, right? The riskier it becomes to manipulate the price as more and more people hold spot Bitcoin, because that is ultimately underlying these things. That's what you can do as an individual, in my opinion. Stay educated on these things. And if all of this is true, right? If we just take it for what it is, if all of this is true, Jane Street is suppressing the price, all that means for you today is, I mean, it's always been this way, right? Bitcoin has always been this way, even without the derivatives, right? There was pretty quickly derivatives on Bitcoin in the form of these perpetual swaps and things like that. Anyway, which you could go super leverage long on or short on or whatever. And if you were just an individual with a lot of spot Bitcoin, you could create a sell-off just like this, right? So this isn't really anything new. It's gotten more sophisticated. It's gotten larger, and it's having maybe more of an effect. But this is something that's been known and seen in the price of Bitcoin, in the movements of spot Bitcoin, and the use of perpetuals as leverage. You can see that large leverage spikes come out on certain prices, either short or long, and the price trends to go and destroy those longs. So this isn't really anything new, except that there's now this talk about the fact that if paper Bitcoin can exist on top, if derivatives of Bitcoin can exist on top of Bitcoin, then the 21 million cap is not as relevant anymore, which I don't fully agree on. Because manipulating the exchange rate value of Bitcoin doesn't destroy the entire thesis of what Bitcoin's value proposition is, right? This is a short-term manipulation of price, as far as I see it. So where was I going with that? With that, again, what you can do is hold spot. What you can do is know that this is happening and recognize pockets of leverage, pockets of returning price action, and participate in the fact that the sats are cheaper, right? It's not the way you think as a Bitcoiner is much different than the way you think as a normie. Bitcoiners win either way, right? If Bitcoin's price goes up, your net worth goes up, but your income goes down. If Bitcoin's price goes down, your income goes up, but your net worth goes down. So either way, you can chalk it up to a win. Of course, there's individuals out there where it's more important to have a higher income priced in Bitcoin, and there's individuals where it's more important to have a higher net worth priced in Bitcoin. So it's case dependent, but there's a silver lining to any sort of short-term price action with Bitcoin if you have a real Bitcoiner's mindset. 88 sats here. The real question is, why are they doing it? The reason they're doing it, in my opinion, is profits. It's incredibly valuable. And Okay, so there's actually, this is a really good question because it actually is deeper than just money, right? Just profits. But that is definitely where you should start to understand this, right? So if they can sell Bitcoin that causes cascading leveraged positions to be liquidated, causing the price to go down, say that again, they sell at 69,000, they buy back at 67,000, they now own more Bitcoin, even though potentially they were losing as they sold that position because they're able to buy it back cheaper. So this short-term price manipulation allows them to accumulate more Bitcoin or more assets in general, because they might just be offsetting that or whatever with the derivatives that they have, but it's still allowing them to just make profits. Now, the other thing there that you can maybe think second layer to that. You think, okay, well, this is allowing them to acquire more Bitcoin because they're manipulating the short-term price and scooping up cheaper sats because of liquidating leveraged players and traders. Then they're acquiring more Bitcoin. And maybe that's the goal, that these institutions capture a larger and larger amount of Bitcoin because they're able to trick retail and traders to give up their Bitcoin at certain prices because they've leveraged it in a precarious way. So that could be second order, right? That could be the other additional reason that they're doing this, right? Is because they understand that if they have more Bitcoin, they have more power in the future. And they're just kind of trying to do this as quietly as possible without alerting anybody that they are actively accumulating as much as possible. Um, let's go back to the top of the comments here. I'm just going to start going through some comments. We got Nav in the chat. What's up? Nice to see you. How is the new AI stuff you've been testing? Can you talk about it? You mentioned on Maple Bitcoin that you have an AI agent for Maple Bitcoin. What does the agent do? The agent is just getting built. The agent will work for us in a multitude of ways, and as we discover more tasks for it, we'll train it on those tasks. Um, yeah, we're still figuring out different business stuff to be able to actually run the AI long term. But yeah, I can't talk that much about it. There will be a couple small videos I'll make about how things I've set up and different things I'm going to do. Some things I've got to keep private for business sake, and like my large short derivatives position. Um, Forest Total Street is the new firm that I'm starting. Do you know anything about that? Do I know anything about what? Uh, all right. Your sound is off. Yeah, fix the mic. Thank you guys for that. And what's up in the chat? There's a few people. Hello, 65 sats. Nice to see you. When you have a money printer, do you care about profits? So there's always what's interesting here, in my opinion, is um, the money printer in a pure in a more pure totalitarian communist society, say China, is is a lot more direct, and there's a lot less competition for access to the money printer. The Bank of China basically creates the money, gives it to whoever they want. And in the Western world, my thought of it is that it's actually a lot more cutthroat. I mean, it's actually maybe similar in China as well, because you can sort of like game. It's kind of the same here too, actually. Now that I'm thinking about it, essentially, what I'm alluding to is that everybody is subservient, even within the financial industrial complex, Jane Street being a part of that, one of the nodes, maybe, is how Simon Dixon would talk about it, right? Even the term financial industrial complex, I'm borrowing from him. Uh, these are sort of cutthroat players within the game, and they all have a specific access to it, but they don't have an unlimited access to it. It's how subservient to the person or organization above you are you, how much can you give back to certain players and give access to certain players and do activities that certain players want because of your access to the money printer, right? It's not you can't get close to the money printer if you're a purely altruistic for the people type of organization, because that's not what the money printer is for. The money printer is for the select few to benefit the most from the action of the many. So Jane Street does not have, in my opinion, a money printer. They do not have unlimited access. They are an independent node that has a degree of access because of their privilege to certain aspects of freshly printed money or new money, debt, and so on. And they, with those weapons, they basically go out and conquer as much as they can. And so it's by limiting. So the money printer has member banks, and again, these are all competing against each other to some degree, and there's sort of a central communistic organization at the top, which is the central bank, but they're all still competing for that money that comes out. So the way I see it is they do care about profits. They definitely care about profits, is the way I see it. Jambobski. Hey man, total noob here. What is the difference between a Bitcoin address and a UTXO? A Bitcoin address, a Bitcoin receiving address, is a location that can store a UTXO. A UTXO is an unspent transaction output. So that is Bitcoin that has been received to an address, and it has its own information around it. And then you can, if you have access to the address, like the Bitcoin address is a public address, right? If it's a SegWit, it's a BC1Q, and it has a private key attached specifically to that address that is derived from your master private key, which is derived from your seed phrase. And so if you have the public address that has received a UTXO, a chunk of Bitcoin, and you have the corresponding private key, you can sign a transaction and send it to another Bitcoin address. There's no perfect analogy because Bitcoin is novel. It's its own concept, but you can kind of think about it like there's just no way. There's no real good way to explain it in an analogy. I haven't really thought through how to explain that, but maybe like a wallet, like a Bitcoin address is like a physical wallet, right? You got your physical wallet. This is a UTXO, and you receive the UTXO into your wallet, and then you can take the UTXO and spend the UTXO, and you still have the wallet. You still have the access. Like I can still access into this wallet, but I should probably use a different one for privacy reasons, just generally speaking. But technically, you could reuse that same address as well, but it's not advised to. And there's more intricacy and stuff like that as well as why. But for privacy reasons, you should use a different address each time, which by default, any good hardware wallet software will do. I don't know. What do you guys think about that analogy? I mean, a lot of times people will talk about UTXOs as kind of being the bills or like the cash. Bitcoin address as the wallet. I mean, the problem is here is that we're kind of using different terms that are already used, right? Like hardware wallet. It's a seed generator and signing device. It's not a wallet. You have a companion app where you have a watch only version of your Bitcoin account, and you have wallet and you have addresses within there, and each address could be a space for a UTXO or maybe a wallet in that sense. Yeah, I don't think the definitions. I don't think uh, the chosen words that we've used to describe these things are really that solid, actually. I think they're kind of bad. um, and unfortunately, if you try to change them, then you're just kind of confusing the people that already use them. So yeah. Daft 444. Hi, for me, DCA is really hard because I fear the Omega candle, and the FOMO makes it hard not to buy even more when the price drops. Yeah, for me, the way I purchase Bitcoin is I have a DCA, dollar cost average, that I don't think about, that I just have some amount of cash for, being held in my account, and then if I see the price dip, I buy a little bit more. It's sort of a hybrid strategy, right? The lump sum when I believe that prices are depressed, based on maybe where Bitcoin's price is compared to its 200 200-day moving average. Maybe if the fear and greed index is in the teens, I might buy a little bit more if I have extra cash. And that way, you have like a dollar cost average. If people just set that up and bought Bitcoin and didn't think about it and did it for 10, 20 years, like that could be way more than enough. Just that action alone. A simple DCA of $5 a day, right? The cost of a Starbucks coffee. You'll be set. You'll be set. At least that's my thought. But if you double down on those dips, you'll see an increased amount of Satoshis that you own over time. I don't fear the Omega candle because the Omega candle cannot exist in this market where um, prices need to be understood by all participants. So if an Omega candle happens, the next day a Doomeggle candle will happen and it will retrace. And I don't mean literally the next day potentially, but Bitcoin's volatility is such that chasing the ups is how you get wrecked in the short term if you have a short term position. If you're willing to sell your Satoshis, you'll get wrecked. If you're just holding and you're continuing to buy and you lump summed because the price was going up, you will be down on your position, which again will be sort of a limited time thing potentially. And that's my thought. And, looking into history is fairly evident. And yeah, I mean, you just buy on the dips. Double the way I do it, double dip on the dips. I'm George Costanza at the party, double dipping my chip in the salsa when the price is down, and I am DCAing nonstop as well. BHF, good to see you in the chat. UTXO is a numbered deposit. Yeah, it's a good way to put it because it can be any denomination. A numbered deposit. Yeah, I kind of like that as well. Numbered deposit, the address is the wallet. Yeah. And your private key is maybe the key to unlock, if you have a lock on your wallet. I don't know who has a lock on their wallet, but that could be another way to describe that as well. So I'm just going to quickly sign back into my Bitcoin Well account. Again, if you guys want to check out the school community that I'm building, it's really, really awesome space to hang out. There is a free trial as well, so you could just give it a shot. And then you could do the lifetime membership if that's something you want, or there's other options as well. Scan that QR code right there to check out the school community. Lots of things are offered. And it's your net worth is your network. Lots of opportunities to meet other Bitcoiners, build projects together, collaborate in some sense, and learn all about Bitcoin through the courses that I have on there as well that are exclusive to the school. So I'd recommend checking that out, and you can scan the QR code or go to school.com/Bitcoin Masters. Okay, so let's do a couple more tosses in the wishing well right now while I have you guys. And we'll just do, there we go. We'll do a couple tosses in the wishing well, a couple more questions if there are any, and we'll end it off at the top of the hour. So this is Bitcoin Well, and they do this really cool rewards program that you've probably seen on my channel. I do 4 tosses every week in this for you guys. 210 sats again, 3 in a row. Woo! 3 in a row, 210 sats, the lowest you could get. So this fourth one, you know what they say, the famous saying, fourth time is the try. We're going to do one more toss in the wishing well, and we will see how it goes. Play, redeem. If you guys don't want to compete for these sats because only one person can win these, you can just use my Bitcoin wishing, my Bitcoin well. Oh my God, another 210. I got nerfed on here, guys. You can use my link to sign up for Bitcoin well, and you'll get, I believe, 5 free tosses in the Bitcoin wishing well. I believe that's how many. Could be wrong. All right. What does Bitcoin need to go to the next step? What does Bitcoin need? Oh, what does Bitcoin need to go to the next step? Yeah, this is a really good question. Jorah's always, you know, that dude's always thinking. Yeah, what does it need to go to the next stop? The next step. I think it needs, depends what that means, right? If it's just about price, it needs more capital. It needs more people holding Bitcoin as a reserve and more financial net worth in Bitcoin, people, institutions, and such. To me, that isn't really what's important. I think Bitcoin needs more users. I think it's a network. And the net worth of the people, of course, matters for the price and for potentially the economic activity of using Bitcoin as well. But if just more people held Bitcoin as part of the reserves, if more people ran Bitcoin nodes, have accounts at different Bitcoin exchanges, and are DCAing, we have no idea what people's earnings will be. And if somebody has an understanding of Bitcoin and they begin to earn more money, that means more of their capital will flow into Bitcoin. So I think the plebs, I think the retail are fundamentally overlooked now. You know, if you follow somebody like British Hodl, a dude, oh, you guys are cooked. I don't even talk about buying one Bitcoin anymore because big dog Larry Fink is in the room and iBit is here and all this garbage. And to me, again, you can see what has happened when these large institutions have come into Bitcoin. They just treat it as something that they can manipulate in the short term. I mean, maybe they are getting large spot positions and they'll be able to unwind their derivative positions over time or whatnot. But to me, these people don't matter, right? These are people that are looking at Bitcoin as Larry Fink says, oh, it's a fear trade. If you're afraid of your government and blah, blah, blah. And it's like, yeah, okay. I understand that perspective, but it's a hope trade, man. It's the exact opposite of that. I'm not yeah, I am afraid of what is going to happen because of fiat and because of government controlled money and what people with too much power and too little brain are doing in the world. But I'm hopeful because of Bitcoin that there is a fair monetary network that anyone can participate in. Anyone can get access to newly mined Bitcoin through applying proof of work. And there isn't this disproportionately beneficial money printer for anybody close to the warmth of the printer, right? That's not the way Bitcoin works. It is decentralized all the way to the issuance, which is incredibly important. So Bitcoin needs more education. Bitcoin needs more plebs. And I think, you know, my channel name has changed from Bitcoin Not Crypto to Forest Total, but that remains my biggest message. Bitcoin Not Crypto. Doesn't mean Bitcoin is not a cryptocurrency. It means that crypto is a distraction, in fact, a deterrent. And of course, all roads do lead to Bitcoin, and all these people that end up putting capital into crypto will eventually put money into Bitcoin, whether they're the founders of the cryptocurrency or not. The plebs will eventually realize, oh, okay, I've been burned too many times by Do Kwon, Vitalik, and Garlic House, and they will eventually say, okay, well, Bitcoin doesn't have a CEO who is developing a CBDC or Rails for RWA or whatever nonsense narrative it is this time. It is just trying to be money, right? It's trying to be a monetary network, and it's completely decentralized in every level it can be. So I'll just park my capital there. And the people that created these tokens are doing the same thing. they're buying Bitcoin instead of holding their crap. So I think generally though, Bitcoin just needs more education, and I'm not a I'm not somebody that cares about the people in Wall Street, how much Bitcoin they have. I don't care about these large institutional people that are financially wealthy already. It doesn't matter to me. Those people don't matter to me. I don't think Bitcoin will just naturally get more of those because people are intrinsically greedy, and greed is a way that people get introduced to Bitcoin as well. But the small fry, uh, need more Bitcoin, um, and it's education. It's education, and it's not just Bitcoin podcasts. Bitcoin podcasts are great, but they're already speaking to Bitcoiners. They're speaking to Bitcoiners at different levels. So there's different, and every Bitcoiner needs to grow in their understanding of Bitcoin. So it's awesome to have that. But I think we need people who are not Bitcoiners to talk about the problems of fiat in other realms. If they're a real estate channel, if they're a comedian doing a podcast, if we need the ideas of fiat being a massive problem, which leads people to sound money, which leads people to Bitcoin as the only realistic alternative. And we need that in all different realms, not just the Bitcoin echo chamber and ecosystem. I know part of my move to get into Bitcoin was because of Tim Dillon, who's a comedian who um, spoke at one of the Bitcoin conferences, and he mentioned it in pretty good light. He gave Bitcoin to some Ukrainian fund when the war broke out, and it was just the couple of little times that Bitcoin kind of entered into the ecosystem, not from because I wasn't watching Bitcoin podcasts then. I knew a little bit about Bitcoin, but it just re-entered into my world through a different avenue, which I think is really underrated. I think Bitcoiners need to go on normal podcasts, not necessarily talking only about Bitcoin. But I think the message is how fiat is robbing people blind, how inflation, how the cost of living is directly caused by the devaluation of the currency that they use as a denominator. So I'm even thinking about this, right? All weekend I've been thinking about one of my other passions is cooking. Is making these YouTube shorts on a different channel that is detailing recipes and and just randomly kind of throwing in there, hey, and making it all about money as well, about the cost of things and being able to make a $15 meal and these kind of things, and just randomly throwing in there. Well, the cost of beef is skyrocketing, not because there's less cows or there's more demand for beef. It's because the currency that it's being denominated in is not as valuable. You get less cow for your dollars. Just kind of throwing that in there just in every short, I think would be funny because people are going to stumble upon that when they're looking for recipes. They see, a short, they're scrolling, and then all of a sudden you're getting taught about sound money principles. And again, sometimes it can just take these one little things in a realm where you're not exposed to that, and it can trigger something. So I think that's what we need. I've been thinking about doing it. I don't know. It's a whole big endeavor. I got too many ideas, too many things pulling me in different directions. Don't know if that's the best use of my time, but it is a passion of mine, and it could be fun. Nope, I do not follow Benjamin. Bitcoin well cheaping out. Okay, it's the hour here. I almost have 40K subs. Yes, I do. Hey, Jor for adoption VHF. I don't think Bitcoin needs anything except for time. Yep, it does need time. It does need time, but it also needs people to stop conflating it with crypto. That's a big thing, I would say. Big thing. There's a lot of future Bitcoiners on Rumble. They're ready for it. Yeah. Yep. That's true. Love that idea. Chef Hodel. That could be it. It could be it. I want to make it really like not Bitcoin related, but just sneak Bitcoin stuff in there just to get people. I think would be fun. All right, guys, that's the hour. Appreciate your time. Appreciate you tuning in. We all learned something together today. Reading that post. Again, we should fact check those things. We should look deeper into them. A lot of it is sort of speculation. I got the RGBT plus here going on my mic. I just realized that. Again, thanks everybody for tuning in. We'll see you next week. Actually, we'll see you tomorrow as well. I'm going live with 88 Sats and Brandon and Robin. So we'll see you on this channel. We're going live. Then we have a couple recorded videos. Stay tuned for this announcement here. We have a full tutorial on how to use a coin join coming out this week. This is part of my privacy course that I have on my school. And some of that stuff is going to be public, some of the tutorial stuff, and then some of the explanatory type full breakdowns and not portfolio, but like profiles of how to become more digitally private will be exclusive to the course, which I'm releasing episode by episode in the school. So join that free trial. We'll see you guys there. Thanks, everybody, and see you tomorrow.